Hello everybody, this is AK. I'm back. So I just had lunch and feeling a bit drowsy. I decided to rest in bed and keep my injured foot elevated. Doctor says you'll heal faster that way. So the brain's working at 50% now. Probably I might drift off to sleep later, have a little nap. Right, but before that, I told myself I should make this video. Otherwise, I might not make it later if I feel lazy, and it wouldn't be useful to make this video tomorrow because Alibaba will be having its earnings call tomorrow. So this video is about my expectations and what I'm going to do next, right? So if you have been following me, you know that I have been accumulating Alibaba's shares. I've been buying more of its shares, and I bought even more yesterday, right? And I paid the highest price I've ever paid for Alibaba shares yesterday at $4.23, $4.22 per share. And that's, of course, the Singapore Depository Receipts, the SDR, right, of Alibaba's shares. Highest price I've ever paid. And some might wonder, why are you paying higher prices? Well, a couple of reasons. First reason is, of course, I think Alibaba, the stock is still cheap. Even at those prices, I think it's still cheap. And number two, I think the stock price would probably go higher after tomorrow's earnings report. Okay, that's the reason. And I would like to buy more if the share price should come down after tomorrow's earnings report, right? I mean, it's just my guess that the share price will go higher, but the share price could go lower. And if the share price go lower, I'll want to buy more. So now let me explain. Why do I think Alibaba is still cheap, right? Even at those prices I paid yesterday. The market estimate for Alibaba's earnings per share, right, the EPS, for this year, 2025, is about 10 Hong Kong dollars per share. Right, that means they expect Alibaba to make about an earnings of 10 Hong Kong dollars per share this year in 2025. And if you use that estimate, then at 120 Hong Kong dollars per share, you're paying a 12 times PE, right? 12 times price to earnings ratio for a tech company, for e-commerce company with cloud infrastructure business, with AI business, only 12 times PE, right? And if you were to compare that to its peers like Amazon or maybe Microsoft, those entities are trading at closer to 30 times PE ratio. So let that sink in for a while. So Alibaba at 12 times or 12.5 times PE ratio, it's very cheap, right, in comparison, right? So I mean, there's probably still a lot of this thinking that Alibaba is a Chinese company and maybe it's not as investable as American companies, because of policy risk, and I've said in a recent video that I think policy risk in China, when it comes to the tech sector, has abated, if not totally disappeared, right? Policy has become very supportive. So that fear that I used to have is gone, right? And so it's very cheap. And could we see Alibaba being re-rated in the future, and then the market says maybe Alibaba should be trading at 20 times PE, 24 times PE, that kind of stuff? Then of course easily Alibaba's share price could double from here. right? And then that's one way to say that it's cheap. Then the other way is, if you use sum of the parts. If you use sum of the parts, right, that means you look at all the different parts of the business and you try to determine how much each part is worth, then you put everything together, then get sum of the parts. Right, and if you look at the sum of the parts, DBS has done some research on this before, and they said, just the e-commerce business alone, you're talking about Taobao, Tmall, that kind. Just the e-commerce business alone, they value it at about 120 Hong Kong dollars per share. Right, so if we will pay 120 Hong Kong dollars per share today for Alibaba, so we are getting its cloud computing business, its AI business for free. And now let that sink in for a while again. Right, so by all measures, it seems that Alibaba is still cheap, right? It's still cheap. And that's the reason why I was willing to pay, $4.22, $4.23. One of the reasons why I was willing to pay the highest price I've ever paid for Alibaba's stocks yesterday. Right, at those kind of prices, it was about 124 Hong Kong dollars per share, right? Which is just a few dollars higher than 120 Hong Kong dollars per share. And if tomorrow's results come in better than expected or just meeting expectations, Mr. Market's expectations, we could see the share price going even higher. And do I think that the numbers will come in better than expected or come in as good as we expect it to be? I think so, right? And this is judging from the last earnings call, the kind of momentum that was reported. The growth in AI has been tremendous, right? And it is unlikely to stop. The cloud computing business revenue increased by 11% in the last earnings call, and this is likely to continue, right? So, and the CEO has said before, that for Alibaba now, the cloud computing business is its main growth driver, the main revenue driver. So that's where the growth is coming for Alibaba, and that's why they're sinking in so much money in the next 3 years to invest in cloud and AI, right? So, and they are embedding AI in all aspects of the business, and that it will grow the business, and the business will become more profitable on all fronts. So I expect the momentum to continue tomorrow. Unlikely to stop these things, once it starts, it has inertia, right? Unless something catastrophic happens, it's unlikely that the revenue growth will be impeded, right? But if for some reason tomorrow the earnings call comes in, and Mr. Market feels disappointed for some reason. And one of the reasons I can think of is maybe Mr. Market expects it to grow at 11%, but instead it grows at only 5%. And Mr. Market gets disappointed and sells down the stock. What would I do? I'll buy more. I'll buy more. If I think Alibaba is cheap today, and if the earnings call tomorrow reports growth that comes in lower than expected, there is still growth. There's still growth. So it'll still be cheap. So if Mr. Market sells down the stock tomorrow, right, maybe it goes down to the next support level that I identified in the past videos, it's a perfect opportunity for me to buy more, right? So that's my plan, right? And but if the stock price goes up because the results come in better than expected, then I'm glad I bought more yesterday and last week, right? So that's all I want to say. I thought I should share more about why I think Alibaba is cheap, how I arrived at that conclusion, and how, quite possibly when we pay the price Mr. Market is asking for today for Alibaba, we are actually getting its cloud computing business, its AI business for free, if you know what I'm saying. And I like getting things for free, right? So let's see what happens tomorrow, what kind of results we get from Alibaba tomorrow in this earnings call, right? So if AK can talk to himself, so can you. Bye-bye.